A contractor hands over a certificate of insurance. Property manager or the project manager reviews it, files it away. Everyone assumes that the coverage requirements have been satisfied. But what if I told you that that certificate may not provide the protection that you think it does? I'm Ciara, founder and CEO of the Bunker Insurance and Risk Management, and today we're going to talk about one of the most misunderstood pieces of paper in commercial insurance: certificates of insurance. So many South Florida businesses believe that the certificate is what creates insurance, and it does not. This misunderstanding can be so expensive for you and all of those involved. A certificate of insurance, often called a COI, is proof that insurance was active on a specific date, the date that's at the top corner. Think of it as a snapshot. It provides you basic information about a policy effective dates, current limits, the carrier, the address of the insured, but it doesn't change a policy. It does not create coverage, and it doesn't automatically grant rights to a certificate holder. In fact, the Accord specifically states that this is for informational purposes only. And this is where the problems start for South Florida contractors. A contract requires a specific type of additional insured, waiver of subrogation, primary non-contributory, maybe a 30-day cancellation notice. A certificate gets issued and everyone thinks that the requirements have been met. But if the policy does not specifically have these endorsements included, the fact that they're put onto a certificate does not mean that the policy includes it. The policy is what controls coverage, not the certificate. So here's a real-world example. Imagine a contractor begins a project. The general contractor receives a certificate of insurance proving that the sub has general liability insurance. Months later, a claim occurs, and the general contractor is expecting to have additional insured status under the subcontractor's policy. The problem? They put it on the certificate, but the actual policy was never endorsed or changed to add the general contractor as an additional insured. The certificate suggests one thing, but the policy says another. And this is where the disputes begin. So what should you be asking for? Instead of just relying on a certificate, general contractors should be asking, is there an actual additional insured endorsement? Is waiver of subrogation included? Is primary non-contributory wording required? Does the endorsement match the contract requirements? The certificate is just a snapshot. It's a starting point, but it's not the whole picture. And this matters because contracts transfer risk. Insurance is what supports that transfer. If the contract requires something that the policy does not have, you're going to have an issue when a claim arises. That's why confirming that certificates are accurate and actually match what's on a policy jacket is critical to your construction operations. So a certificate of insurance is an important document, and it's a snapshot of a current policy, but it's not the full story. But it should never be treated as proof that a contractual requirement has been met. At the Bunker, we make sure to help our insureds review contracts, certificates, and policy endorsements to make sure that they align before a claim occurs. If you're looking for an insurance agent to help you manage your certificates, click on the link below and let's chat.